Hey, Kevin here, top 100 financial advisor, two-time author, one-time bestseller. And I want to talk about Carnival stock because it is one of the most popular investments, at least that I've seen on my social media as of late. And we want to discuss why you would buy it, would it be a great idea, and what we expect from it in the future. Before we do, make sure you go to buildingbread.com, go and hit the free classes rather, and you'll see some of the resources that I do offer you guys every single day. How to choose your own stocks, how $2,000 can make your kid a millionaire. So if you're looking for making generational wealth, this is a free resource for you. And then one of my favorites, and I teach these classes every day, how to start investing without losing everything. So check those out. All of those are free. Now let's go ahead and move to the whiteboard. Just talk about Carnival Cruises and some of the other stocks I've seen out there as well as in terms of what people have been buying and what they're looking into. So Carnival Cruise, as you see here, all this is from Yahoo Finance, free app, free website. You guys can check that out. So what I want to do is compare the over the past 1 year, how well did the stock do versus the market, and how well did it do over the past 5 years. And we'll talk about that and what that means for you as an investor and what you should expect. So SPY is the S&P 500. That is the 500 largest companies. That's the Apples, the Googles, all of those together. This is a very simple investment. It's an index investment, which means, again, you own the entire market. You don't have to pick the best stock. And if you're an investor, most times you want to either match, or I would say meet or beat the index. So you want to get exactly what the index is getting, or you want to do just a bit better. It is difficult, but not impossible to beat the market over time. So let's look at how Carnival Cruise did over the last year and over the past 5 years. The reason we're looking at that is because we want to see, before the coronavirus, was this a good stock or not? And if it was, then okay, well maybe it would make sense to invest. But if it wasn't, and it was losing money beforehand, then it might not be the best time or the best stock for you right now in this moment. So first, I'm going to go ahead and fill in what we know about the S&P 500. Over the past year, we know the S&P is down 8%. We know this is because of coronavirus. Most of the stocks within this year are going to be negative. That's okay because the market is negative, and these are things that we do expect. We also know over the past 5 years, the S&P 500 has been up 85%, 25%. What I'm going to do actually is switch this over and just make it green, since that's what we're used to seeing anyway. And then we'll switch this to red, and we'll make that negative 8%. There we go. I'm also going to make this green a little bit smaller. It's not so obnoxious. There we go. Now, Carnival Cruise, how well have they done over the past year? Now, we know, again, the past year, not all that great. They're down 82% over the past year. Obviously, the majority of that has been in the last month or so. Now, over the past 5 years, they were up, actually, but they were only up 8%. I'm going to redraw this. 25. There we go. So when I look at this, as an investor, do I want Carnival Cruise? If they improve, are they going to improve more than the overall stock market? Maybe, maybe not, but we know that the index wins in this particular situation. This is a back test. So it's only going to tell us what happened in the past. It's not necessarily going to predict the future. But we know now that the losses are more severe. We can see that here. And the gains, at least in the past, have been a bit better. So the index, in this case, has done better than Carnival Cruises. Now, again, over the next 5 years, is this going to be the same? It may not be exactly the same, but I'm willing to wager that it is probably going to be the S&P 500 that beats Carnival Cruise both now and in the future. We've seen that too. So let's scroll down to some of the other most popular stocks that we talk about right now. Now, again, the S&P 500 is going to be the same, down 8%, and then we're up 25. And let me make sure I had that right. Good. Okay. All right, so what do we know here? American Airlines. What we know over the past 1 year, we know American Airlines is down 66%. And we know over the past 5 years, they've been down 36%. Everybody says buy low, sell high, but again, do you really want that? Again, it's not going to predict the future, but it does give us a very good indication of what may happen, at least in the near term. Again, the S&P 500 wins out. You are taking on a lot more risk and losing right now. And then again, they've been down over the past 5 years. This isn't something that's solely because of the coronavirus. And that's something I've been urging and telling new investors to be very, very careful about that. Let's go to Delta. Is, if I had to pick one airline stock, it's probably the one I would go with. We know again, S&P 500 was down 8%, and we know it was up 25. Here we go. All right, so let's compare the S&P 500 here. We know that Delta is down 53% this year. That's okay. We know the market is down significantly, especially for airlines, but they were actually up 26% over the past 5 years. And this again is why you want to be very careful about what stocks you buy, because not all airline stocks are the same. They're different companies, they're run differently, different CEOs, different financials and business models, maybe the same business model, but different ways of executing things. And again, this is just a 1% difference. Is a big enough difference to take this type of risk? That's something you'll have to answer on your own. But again, something that you want to note, something that you want to consider. Let's move on to Walmart. Again, same 8% here. And then we have the 25% here. Over the past year, Walmart was up 16%. And as of the last 5 years, Walmart was up 20%. So this shows me, this is more of a, like I've been saying for a while, more of a defensive stock. Something that does relatively well compared to the overall market. And these numbers will change over the next few weeks, few days. It could go higher, it could go lower. Now again, here, you're actually not doing as well as the market here. You have to decide, are you going to move more into defensive stock like Walmart now and then switch over? Completely up to you. We don't know where Walmart will go in the future. They are competing with Amazon. They're doing okay. But again, these are decisions that you have to make. You have to know these things or be aware of these things if you're putting money into the market right now. And we're going to do the last one. This is American Tower Corp. It is a REIT, which stands for Real Estate Investment Trust. So it owns land. For example, this one particularly owns the land around the cell towers. So Verizon, T-Mobile, so on and so forth. They own the space that they put those towers on. So that's how this particular REIT works. Not necessarily a stock, trades just like a stock, but that's what this is. Now, again, we know -8. We know we have a positive 25. Oops. For the percent sign here. All right, so how did AMT do? For the past year, they were at 5%. And over the past 5 years, they were 108%. So here you can see they did well with at least the last year, and did extremely well over the last 5 years. These are things that you want to know as an investor. I'm going to go back. All right, so those are things that you want to be aware of if you are an investor. You don't, again, want to just jump into things for the sake of jumping into them. You want to ask yourself, how does this compare to the average? How does this investment compare to the market? You can get an index fund, just like I showed you. SPY is one of them. You can type that ticker symbol into Yahoo Finance or anywhere, and you can take on a lot less risk for better performance or very, very similar performance. You don't have to risk putting so much money into one stock and it not go well. So those are my cautions for things like American Airlines. That's my caution for things like Carnival Cruises, Delta. There's a case to be made that that's going to be okay. Defensive stocks like Walmart, REITs like AMT, those tend to do well in times like this. It does not predict the future. So I'm not telling you go and invest in it. You need to do further research to see if that's something you're interested in. However, just because it's cheap, just because people are just doing it, doesn't always make it the best investment. When the economy recovers, it could be 6 months from now, it could be 18 months from now. I'm not 100% sure that Carnival Cruise is going to do better than the market. Could they recover? Yes. Could you make money? Yes. But could you make more money somewhere else? Could you make more money without taking on as much risk as you would be with Carnival? Those are the questions you want to ask yourself in moments like these. So before you jump in, test out your investments, think twice, and then start to make your moves from there. To do that, one of the ways you can do that, rather, again, buildingbread.com. Check out our free classes and webinars. I'm teaching classes every single day. So check that out here. I'll talk to you guys later. See ya.